Well, hello and welcome to this Money Control live stream. It's a Tuesday morning and you're watching Morning Trade with me, Nandita Khemka. Well, the SGX Nifty is giving out muted cues. However, remember, it is above that crucial 18,700 mark. So, looks like there is some room for upside on the Nifty in today's session. Over the next 30 minutes, we'll be talking about all the stocks in focus, the Tata Group stocks and what to do with them. And of course, we'll also be getting all your stock-related queries answered by our technical expert on the show who will be joining us shortly. But before we do all that, let's take a look at what the top headlines are looking like this morning. Wall Street cools its heels after Friday's solid run. S&P 500 hits a 9-month high in intraday trade but gives up gains to end with minor losses. Apple too ends lower after hitting an all-time high during the session, even as it unveils a host of products at its worldwide developer conference last night. Asian markets trade mixed following a weak handover from Wall Street. The SGX Nifty is trading above that 18,700 mark, so we'll have to see what our Nifty, in fact our markets do in today's session. On the other hand, MPC's 3-day meeting gets underway today with the decision due to be announced on Thursday. Street is anticipating a status quo policy. All eyes will be on whether or not the stance will change this time around. Also, Apple unveils its first major product since 2014 in the form of augmented reality headset, Vision Pro, which will be launched next year and will retail for nearly $3,500. New offerings also include 3 Mac series laptops, FaceTime for Apple TV, and operating system upgrades for existing products. Well, let's get on board then. Our technical expert on the show, Sachitanand Uttekar of Trade Bull Securities, is joining in this morning. Good morning, Sachitanand. Good to have you on the show. You know, benchmarks, of course, just about 2% away from all-time highs. But it's the Midcap index that Warren's mentioned, given the fact that it has been hitting fresh record for quite some time. So what is your outlook on the broader market now going forward?
Good morning, Nandita. I think overall the sentiment still remains positive. Even yesterday we saw Nifty trending near that 18,600 cluster. The closing was marginally below it, but there are no signs of any weakness. Even if we look at some of the trend indicators, they are still trending on a positive note. We have the RSI, despite of this up move, still quoting way below 70 mark. Even in yesterday's F&O data, we saw net additions in Nifty futures. Overall sentiment still remains positive, and if you look at the chart formation, the price formation, it is still exhibiting a continuation pattern, which is a bullish flag. I think this particular pattern will get activated once we see Nifty trending above 18,620 in today's session, and that's why we believe that long position should be retained. Even on a decline, we are advocating adding fresh longs. From a momentum perspective, I think 18,520 would be an ideal level below which this particular momentum may fizzle out. So that particular level serves as a very good stop loss. And on the higher side, we are expecting Nifty to eventually stretch towards 18,730, 18,850 kind of a zone. So I think overall the sentiment still remains positive and the trend is still looking far better. When we look at Nifty Midcap index, they are already quoting at their life highs, and even there, despite of this stretched up move, we still don't have any signs of exhaustion here. From a RSI perspective, despite of this particular up move, there are no signs of any negative divergence. Though the RSI is quoting way inside its overbought kind of a zone. But I think even if we see a decline, I think that particular decline could be temporary. And overall, the entire sentiment still remains positive. So I think from a Nifty perspective, unless we are trending above that 18,520 mark, overall market should perform well.
Well, the overall market should perform well, and looks like the mid-cap party is here to stay. Hang on, Sachitanand, we'll come back to you, but let me also get on board Vinit Bolinjkar of Ventura Securities to talk about, what to do with the Tata Group stocks, Tata Motors, Tata Chemicals, and of course, since we're talking about Tata Motors, we'll also be talking about what to do with the Maruti right now. Good morning, Vinit. Thanks a lot for joining in this morning. Tata Chemicals saw a good rally coming in, given the fact that, the Tata Group has inked an MOU with the Gujarat government to set up an EV battery unit. And, it's for somewhere around 13,000 crore rupees. Given the fact that, Tata Chemicals, mainly looks at the soda ash end of the business. And that will be, of course, used, that is something that is used in the manufacture or making of lithium-ion. So this is a very good development coming in for Tata Chemicals. And aside of that, it also has presence in agrochemical as well as specialty chemical segments, right? So how is the Tata Chemical positioned after the mega deal that it has inked with the Gujarat government?
So, I just one correction. This is a deal signed by Tata Group company and not by the Tata Chemicals business. But having said that, what we have seen is a large amount of action happen in the Tata Chemical stock. It is because of primarily of three things happening. They are doing a 2,000 crore capex, which is out of which about 1,500 crores is going towards a lot of its chemistry as well as soda ash, where they're putting up a million tons across the globe over their 4.2 million ton capacity. Okay, they have inked a lot of lithium carbon. Lithium carbonate is a very important ingredient for making EV batteries, right? And they've inked supplier agreements with a lot of the South American manufacturers. Second thing, what has happened is that the company's operations are getting completely green chemistry. For example, in one of their UK plants, they suck out carbon dioxide from the air, and that is enough to take 20,000 cars out of the road. So that carbon dioxide capture which is done is used to convert it into sodium bicarbonate. And so, Tata Chemicals is on an upward trajectory of growth, making it more green, ESG compliant. And they've also, taken the structure to be very vertically integrated in the US. A lot of their restructuring has happened there. So all this, to my mind, is going to be a step forward. There would be a re-rating of the stock given the fact that it is getting more ESG compliant, the chemistry is getting more green. And I believe this is going to be very, very strong. Secondly, the company has also spoken about being a very strong back-end supplier to the EV vehicle manufacturers. And together with the Tata Motors, I believe that they would be a very strong channel partner in the ecosystem in India.
Right. Vinit, I had mentioned that Tata Group had inked an MOU with the Gujarat government, of which both Tata Motors and Tata Chemicals will be the beneficiaries. But, looking at Tata Motors, the kind of run that it has seen, do you see more headroom for the stock going forward, given the fact that brokerages have, predicted levels of somewhere around 600 to 650 or thereabouts on the stock? Stock is, in fact, at a 6-year high right now.
So, we are not surprised with this move. In fact, we had initiated coverage on this stock at about 410 levels just a couple of months back, and it's up, 28% from those levels. We see further steam in the stock given the fact that, the PV business in the country is doing very well. JLR is coming into its own. There's a lot of expansion happening. And, they've announced a number of new measures and going completely electric. And third thing is the CV cycle in India will continue to boom into 25. So, with all engines firing, we expect this stock to substantially move up. In fact, our target for the next 24 months is upwards of 700. And we will not be surprised if it gets there in earlier than that.
Right. Let's also talk about Maruti, since we are talking about autos. It had really flagged off the semiconductor chip shortage issue once again. It had said that in Q1, in fact, they may see some bit of a production loss as a result of the chip shortage. But, the stock is just about 200 rupees away from its 52-week highs. What is the bull versus bear case emerging when it comes to a Maruti right now?
See, all the legacy issues of the past are well behind us, and that is being now recognized in the markets. And as we speak, we have just released our report on Maruti Suzuki. We have got a target of about 14,000 plus. And the rationale for this is the fact that, Maruti is in the verge of introducing 3 new vehicles, which are hitting the streets as we speak from this month onwards. And that is going to put a fresh fillip into the product cycle of the company. Remember, India has a fancy for new products, and several companies which have launched products have got waiting period as high as 1 year. So, we are going to see some good traction and order booking coming into Maruti. Second is from next year onwards, they will be launching their first EV in collab with Toyota, and they will be launching 6 new vehicles over the next till FY30. Now, we should understand that Tata Motors is the other PV car which has come out with EVs, and they have said that they will be introducing no more fresh products, but the existing models would be refurbished. So to that extent, Maruti will have an edge over Tata Motors in terms of the consumer psyche for going for newer brands that are launched in the markets. An additional thing that we have to understand about Maruti is that now they are scaling to become a more of a UV player than just a small car player. So what happens is that the revenue per car and the EBITDA per car goes up even if the EBITDA margins stay the same. And with EVs coming in, what will happen is that there are no brands in the market, that compete with Tata Motors. So with Maruti. So when Maruti comes up with EV vehicles in a small car segment, okay, they are going to have a lion's share of that market. So I believe that Maruti is well positioned for this, and they're also undertaking capex, which is being done through internal accruals. So the ROEs will go up, and I will not be surprised if profits go up 80% from current levels over the next 3 years.
Well, expect ROEs on Maruti to improve going forward. With that, Vinit, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Getting back to Sachitanand then, Sachitanand, since we are talking about the auto basket, we are getting a few queries on our live feed on TVS Motor. Saujanya has written in and she wants to know your thoughts on this counter. The stock had hit a fresh high recently. Would you advise investors to chase the momentum in some of these two-wheeler stocks now?
From a momentum perspective, I would refrain. In fact, I'm expecting the stock to again correct back to 1240, 1260 kind of a zone. And probably, that will be a good level wherein some momentum longs can be added. The trend structure still remains very strong. We recently saw it, breaking out from that cluster of around 1200 levels. 1180 was the precise level, which has activated a rounding bottom kind of a pattern. Now, this particular pattern has a price target which is placed at around 1420. So, from a positional perspective, in case we get a decline, I think that decline should be healthy. And probably if we see some consolidation, then this particular stock still can be added in one's portfolio for an eventual target of around 1420. The entire pattern will fail only in case the stock slips below 1200 mark on a weekly closing basis. I think that can be a stop loss for the trade.
Right, that's the view on the two-wheeler space and TVS Motor in particular. Let's talk about, some of these shipping counters. They were on a tear yesterday, the kind of rally that Cochin Shipyard, SCI and Mazgaon Dock saw. We have a query coming in from Ashish Chawla and wants to know your thoughts on some of these shipping counters. In fact, like Mazgaon Dock, what would your view be on this particular stock?
Well, we still advocate longs here. The immediate level that we are tracking again from a pullback perspective is placed somewhere close to around 940. So any declines in this particular counter should be utilized to create long positions. The overall trend structure is indicating a price target somewhere close to 1130 on the higher side. So we still feel that this particular momentum can be changed. From a trend perspective, the trend will only get deteriorated in case the stock starts slipping below 880 levels from here on. But as of now, any declines, would be a good opportunity for creating long positions. The price target that we are immediately tracking is somewhere close to around 1140.
Right, 1140 is the level to watch out for on Mazgaon Dock. Hope that answers your query. Let's also talk about the stock of the day. According to me, it should be SBI, given the fact that the board will be meeting on the 9th of June to consider a fundraise for FY24. And this they will be doing via the debt route on a private placement basis. Given the fact that we have RBI policy meet as well on, in fact, it's starting today and the outcome will, of course, be announced on the 8th of June. I think that's Thursday, right? So how should one position in Nifty Bank at this juncture and particularly SBI? What are the charts saying for this?
For Nifty Bank, the trend those still remains positive. But if you look at the immediate bounds, I think 43,800 looks like a decent support. And on the higher side, we may only see momentum once Nifty starts trending comfortably above that 44,500 mark. So we, as of now, the data is suggesting that we may see, this oscillation mode getting continued. And until unless we don't see a breakout on the either side, we would refrain from chasing any momentum. But as of now, the trend still remains positive until 43,800 holds on Nifty Bank spot levels. But when it comes to SBI, I think gradually the stock is showing some signs of momentum. For the last 3 weeks, the stock was consolidating. From a data perspective, the support at around 580 now looks very strong. So probably once the stock starts trending above 600, 602 levels, we may see fresh momentum getting developed here. Overall, we're expecting that the 620 mark could be revisited here, and that's why advocating long positions here. But the stop loss should be maintained on a weekly closing basis below 576.
Right, that's the view on the banking pack and SBI in particular. Let's talk about BHEL. The stock is very close to its 52-week highs, but we have, we have a brokerage view on the stock. Nomura has downgraded the stock to reduce, and target has been cut to 61 rupees or thereabouts. It believes that the robust thermal tender pipeline will offset an overall otherwise weak performance for the stock. In fact, it has cut EBITDA estimate by somewhere around 13 to 4% for FY24 to FY25. The EBITDA cut has been in fact announced to factor in delay in the order inflow and weak margins. And it also believes, in fact, Nomura also believes that the recent order wins appear aggressive and there's limited scope of gross margin recovery going forward. When it comes to BHEL, we have seen the stock, in a fair bit of an uptrend, up somewhere around 2.5% in yesterday's session. Sachitanand, this bit of a downgrade coming in, do you think it'll kind of slam the brakes on the up move that the stock has seen?
Even if it does, I think the support at around 78, 80, I think that particular support is very strong. So from a price perspective, we don't see that particular support getting valued here. But on the higher side, 88 still remains a hurdle. The overall trend from a major perspective still remains positive. We are expecting the stock to again scale back to its 200 monthly exponential moving average, which is placed somewhere close to around 96 levels. So even if we see a decline, I think that particular decline should be utilized to create more long positions. The stop loss should be placed at around 78. And given the fact that the stock has recently broken out from a monthly consolidation, so probably in a couple of months, we may see the stock, trending comfortably above that 96 mark.
Right, that's the view on BHEL then. Let's also take up a few queries now. This one is coming in on Tube Investments. Yagnesh has written in, wants to know your short-term and long-term targets for the stock. Now, the stock over the last 5 days has not done all that well, but it has given a steady 10% return on a monthly basis. What are the targets will you be watching out for on this counter? What are the charts saying?
The stock is it is in a very strong secular bull run. And every time, this particular stock gives a correction, price or a time wise, I think that particular time is good to accumulate the counter. From a immediate perspective, we recently saw it breaking from a bullish flag formation. Again, it is a continuation pattern and a continuation sign. The overall pattern is indicating a price target somewhere close to around 960 from a positional perspective. From a trend perspective, the entire momentum will only fizzle out in case the stock starts trending below 720 levels. So I think even if we see some more slippages towards 760 levels, I think these levels would be good to accumulate the counter. 720 should be the stop loss, and around 950, 960, I think that will be a cluster wherein the stock can be reviewed again.
Right. Sachitanand, some bit of news coming in on the Adani group of stocks. The group has repaid debt to the tune of $2.5 billion. Looks like this will be a sentiment booster for some of these stocks. Do you expect some upside when it comes to Adani Enterprises, Adani Ports and Adani, maybe power in today's session?
So we are tracking Adani Ports, and the immediate level that we are tracking on the higher side is placed somewhere close to around 748. The moment we see this particular level getting breached, the cluster, breakout could push the stock towards 770, 775 kind of a zone. So I think that the trade setup looks more better when it comes to Adani port. The immediate stop loss once this particular breakout is exhibited should be placed at around 740 on a closing basis. When it comes to Adani Enterprises, I think for the last 7 trading sessions, it was trending well above its 5-day exponential moving average. Yesterday, we saw some slippages, but the pattern is not yet negative. It is holding well above its 200-day exponential moving average, which is placed at around 2460. And once we see this particular stock again reversing its trend towards 2520, 2530, then probably we may see some fresh momentum getting generated. From a trading perspective, 2690 would be the target on the higher side, and the stop loss should be placed at around 2440.
Right, that's the view on the Adani group of stocks. I also want to get in your thoughts on Godrej Consumer. The stock has done extremely well on a YTD basis. It's up 18% or thereabouts now. There is news flow that the company will be getting a new CFO, Asif Malbari, from the 10th of August. On the charts, as I mentioned, done pretty well on a YTD basis, on a 1-year basis as well. And it's very close to its 52-week highs. Do you expect it to cross levels of 1100 anytime soon?
We've already seen a very strong rally in the last 2 months, but if you look at the weekly structure, there is some signs of exhaustion here. We are seeing some divergence, and the stock is clearly quoting way outside, away from its 5-week exponential moving average. So probably a pullback could be here. We may see this particular stock again falling towards 1030, 1020 kind of a cluster. I think that will be an ideal level wherein some longs can be added. But the immediate resistance, I think it still remains at around 1100. So until unless we don't see a cluster breakout above 1100, we may not see any fresh momentum. So probably we may see some correction and consolidation in the days coming forward.
Right. That's the call then. Let's also talk about CSB. Even this bank is getting a new CFO who has taken charge. If you look at the stock on a 6-month basis, it has given returns in excess of 20%, heading towards 297 levels, which happens to be its 52-week highs. 300 levels or thereabouts in a couple of weeks?
Could be possible. In fact, 310 is the level that we are also tracking. Recently, we saw a very strong up move, which unlocked from the base of around 210. After 6 weeks of continuous up move, we have seen 6 weeks of consolidation. So probably one more week on the downside, 260 looks like a decent support, wherein some fresh longs can be added. But overall, I think the pattern is still indicating a price target somewhere close to around 310. So given the fact that the time and price correction is in play, probably in next 6 weeks, we may see this particular target getting achieved.
Right, I think we just about have time to squeeze in one last query. This one is coming in from Khitab and wants to know your thoughts on Cyient. He has been holding shares from somewhere around 870 levels or thereabouts. We saw a very good run coming in last week, but yesterday, of course, it has cooled off a bit. Do you think this dip in the stock is a buying opportunity now?
Certainly, yes, but we have already seen a very strong rally for the last 5 months. We have not seen any major correction, shaping up in this particular counter. Even right now, the kind of formation that has been exhibited on the daily scale, it is a clear-cut bearish engulfing formation right at the market, at the stock's highest point. So probably we may see some consolidation here. On the lower side, the momentum will only be fizzled out in case 1265 level is breached. So declines towards 1300 should be healthy. The overall wave structure is still indicating a price target somewhere close to around 1740. So in case if we see a decline towards that 1300 mark, I think that will be a good opportunity. 1265 should be the stop loss for any fresh long positions. Even for existing long positions, that particular stop loss should be maintained on weekly basis. And once we see the stock scaling towards 1740, I think that will be a good time to review the position.
Right, that's the view on Cyient. Then I think with that we have come to the end of this query segment. But before I let you go, Sachidanand, leave us with some stock recommendations for viewers this morning.
So two stocks, both from the Nifty space. One is Reliance, wherein we saw it, scaling above its previous day swing high. Overall long positions have been exhibited here. We are expecting a price target from momentum perspective to be placed at around 25.45. So we are recommending building long positions here with a stop loss at around 24.80. The other stock, which has again pulled its way up higher towards its 200-day exponential moving average, is Tata Steel. On the 60-minute scale, we are seeing a cup and handle formation. The pattern is indicating a price target around 115. From a trading perspective, we are expecting this particular move to be achieved in a week's time. The stop loss for the trade should be placed at around 108, and we are also recommending building long positions here.
Right. So Reliance and Tata Steel, two stock recommendations coming in from Sachidanand this morning. With that, thanks a lot for taking out time and joining in this morning and addressing all of your queries as well. And so with that, we've come to the end of this edition of Morning Trade. But before we go, let's leave you with some visuals of the big launches at the Apple WWDC event last night. Thanks a lot for watching.